All right, good peoples. It's Bruce with Targeted Wealth Creation, and we have the Roundhill Weekly Pay single stocks. They kind of pioneered this, just like they pioneered the weekly pay on the indexes. But there's copycats out there that are coming after them one way or the other. All right, so let's take a look at the five single stocks. And then for some of you that haven't seen this, I'm going to show you sort of my house money stats for many of the popular high yield ETFs, which I did a whole video on. And it also now I updated it to include all the Roundhill single stocks. I've got Curve. I got some Granite shares. I've also got about 25 of the Yield Max fund. So I do all these different machinations to really compare all these statistics. So I find it very useful. I call it the tool to determine which fund I really want to invest in because you can look at it so many different ways. All right. So NVIDIA, NVW, by the way, I don't recall what the four-digit names are, but I got a email, and I can't find it right now from Roundhill. And it said, hey, we're changing the symbol on NVW to a four-digit and also on TSW. If you note, all the other ones are already four-digit. So what I suspect is somewhere on the New York Stock Exchange, somebody wants to use these three-digit, and they're getting pressure at the SEC to say, hey, make it a four-digit and it matches all your other ones. So they did. It still shows up if you go out there and you look on the charting system. I don't recall that there was a date, but I suspect there'll be an official date where it changes. So if you're doing something and you bump up against that, let me just say I told you. Okay, but I couldn't find the email today. I didn't put extensive efforts in, but I did try. All right, 5:30 distribution. NVIDIA weekly payer at Roundhill, 30.5 cents, yielding 43, or sorry, with a price of 43, yielding, call it 37 on the yield. The change, it was up $1.72. Good on you, NVW. So we're still in a mode though where the total collected is less than the decline. But one of the things you'll notice when I go into the comparisons here with the Yield Max, even though they're paying monthly currently, and these same ones, the same five tickers, I mean, they have a different symbol or different ticker letters, but you know what I mean, the underlying, the NVIDIA, the Tesla, the Palantir, the Coin, the Apple. So they're all the same, and but they use different logistics to get their money. And then when I show you my house money stats and in my other spreadsheet, you'll start to be able to see these things differently instead of just telling you. It actually sort of makes it visual. All right. So on the Tesla TSW in Roundhill, it paid 44.5 cents, almost a 55% yield. And we see that we were up also from, at 42.33 for the closing price on Thursday. All right. What's the difference here? Also, bigger decline in the NAV than the money collected. All right. Apple AAPW is paid 10 cents, not a whole lot, yielding a whopping 14, call it 15 by stretching it. It was down zero point 0.6. Um, Look at this, down $14 over here, and they've only paid 3.32. All right, guys. Coin. Coin dropped a lot, as you guys know, but it's still up overall in some ways, but um, you know, they got that huge bump uh, in the S&P with the news of being added. They're just about where they were before that news came out, although I imagine some people knew when we're buying in, and some of the rise was associated prior to the official news. So 50 cents on the coin, yielding 68.44, but they've had some good yields in here. They've had some 80s, 84, 81, 79, 97. But again, $5.68 distributed, and the decline in the fund. Now, again, I'll say this before I do the Palantir one. This fund launched they launched very near the highs of February, the high mark in the indexes. Now we've traded up near it and that kind of stuff, but I don't feel all the stocks are up there. Whereas in February, we were at these index levels, most all of these stocks were exhibiting that. So here's the Palantir. So we paid 50 in coin and we paid 45, yielding 58. Well, we've had some 86, 85, 78, 75, 82, 81. But hey, we've had some 30 percenters. This thing started out kind of slow and then it took off on, and that is symptomatic in the 8 distributions. Now, these are weekly, but in the 8 distributions at YieldMax, the last four are significantly higher yield and significantly higher amounts than the first four were. All right. So 40.3, it went down 0.82. All right, here's my summary on this part. Whoops, that is the other ones you want. The weekly summary. Oh, around here you got so many good funds. All right. So here is the 5 funds. We're showing an inception price. And if you look at this, they all launched on 2/19. So when I do my comparisons, all they have is data since February 19th. So 3 months, 100 days, 100 trading, or 100 days, not 100 trading days. Um, so it forces us down here to only look at the other stocks for the same time period. Whereas some of them have done really well, but they haven't done well in this period. And it is fair. It makes it a little more apples to apples. Um, and I include the underlying as well because I'm going to start doing that all the time. Everybody always says it does better, but I think you need to see it. And people that just say, buy that, it does better, I don't think they give you people that need the income and want the income credit. I mean, it's never going to perform better, but there's a need. This is a way to get some income. Now, I'm going to do my hedge video this weekend because I promised that to people because people are a little that haven't been in these. Some of you guys are pros. You're buying a whole bunch. You've been in them for 18 months and you move around. There's other people dipping their toe, and there's some people just scared to dive in. They look at, Tesla, which was the poster child for NAV erosion. But again, anytime a stock goes from 300 to 100 down and then runs back to 300 real quick, that does not set up an income fund to capture it. And it captures maybe a third, at best a half on the way up, and it takes 95% on the way down. So you never get back even. They say volatility increases the yields in the IV, but not that kind of volatility. I always say you want to be bullish in the underlying. And listen, all stocks that are bullish, they may run up 80% in 3 months, and in a week and a half or 2 weeks go back down 40%, half of what they rose. But then they go up more. So, higher highs and lower lows, or sorry, higher highs and higher lows are what you want in the ultimate kind of underlying. All right. So let's look at the guys. So this is all 5. And then I came down here. But look, except for PLTW, total return is not positive, especially with this launch time. So all of them suffer a NAV loss, right? So just for the 100 days, 13%, 17%, 27%, 21%, and 8.9. So PLTW did the best. And when you take the 100 days and you say, I want to make it a year, right? You got to multiply it times 3.65, which is what the factor would be. And here's your dividends, and you do the same thing. Now, yield max typically when we come down here will outpay these guys percentage wise. Like you look here, here's NVW and NVDY and NVIDIA. NVIDIA doesn't pay any. Um, oh, and by the way, I need to change this price uh, because NVIDIA went up on its earnings news. I meant to do that before, guys. Sorry, I'm typing it in on my other monitor. 139.19 was the closing price on Thursday. All right, so that gives it almost a break even over here, but significantly higher than the 15 percenters. But NVW edges out NVIDIA by 0.62, so you can just about call them even. Now they paid pretty much the same distribution so far, but this is on a $49 stock at launch, and this was on a 21.49 stock at launch. So that's why it's yielding 21.87 in the 100 days, and that's projecting out to almost an 80% yield. Whereas NVW plays the leverage game, okay, to keep their NAV closer and some other things if it's in a bullish environment, but they don't tend to pay as much. Even weekly versus monthly doesn't really matter. I mean, it does to a lot of people, but it doesn't impact how much you get. Although, please understand, and I know many of you know this, YieldMax has filed so that they can do the swap methodology. Okay, they're already doing call spreads, but Roundhill does 120% leverage on these single stocks, and then they use call spreads on top of the swaps instead of synthetics, which is synthetic and call spreads, which is what YieldMax does. So it doesn't mean YieldMax is going to run out and all their funds are going to switch to that. It just means if you file for it and it gets approved, which it will, then you're now eligible in your options to do that. So, and no pun intended with your options now include different kinds of options. All right. And swaps really are, different. They're really not considered an option. All right, guys. So, continuing through, I'm not going to read all of these except to show you who's sort of winning, the scenario. Also, I don't think I updated Tesla. I need to put this in Google Sheets so it updates automatically so I don't have to do that work. Yeah, Tesla is 358.43. Yeah, so that makes it also barely losing in this more brutal period. Um, but the yielding, these numbers are, oops, is Tesla right? No, Tesla went up too. I think it's 943 or 954. Yeah, it is. Oh, Bruce, you missed a couple of these. Okay, TSW is right. I know that. All right, so the winner here was Tesla, still is Tesla. It's only in total return losing 3%. It's paying double, 21 to 11. Okay, call it, you know, 48% more, or I mean almost double it. Um, and so its annualized yield is great, but its NAV is a little worse, right? It's losing 21% versus 17%. Um, so that's what you can look at. Let's see, on the final two, I'm giving the advantage to the Roundhill over Yielmax on the Conies and PLTW over Palti. Now again, 2 to 1, right? 26 to 13. Doesn't round perfectly, but 2 to 1. But they're getting hurt on the NAV. Pulte is down 28%, and PLTW is down only 8.91. So when you annualize all that stuff, what's really difficult when you have a big down period like that and just a small portion of the year and you try to annualize it, you get a number greater than 100%. So I just make it 100%. Stock can't go down more than 100%. So um, that's why the projection, sometimes you can just work with the existing numbers and try and compare. You could add 1395 and a -8 and a 26 and a -28. So you're going to get like a -2 over here. And on their side, they're still going to win. They're going to get like a +4. So either way, PLTW. But I have some interesting stats that I'm going to show you right now. I'm going to drag this over here. Some of you have seen it, but this is my latest, greatest. And I'm just going to tease you a little bit with it. I'm going to start doing these on Saturday, I think. But I presented this in a video a couple of days ago, and I had less funds in it, right? So I had what I thought were the highest assets under management in Yielmax and the better choices, in my opinion. And I had one or two, but now I went in and I said, okay, Yield Maxes are in orange, Roundhills are in blue. I got a Biddo in here for pro shares. I've got a couple of 2 or 3 granites. These haven't, they're trading, but they haven't gotten their first declaration out. NVIDIA and a BTC, okay, for granite. And then I put the curve funds in. Always interesting with the curves. And anyway, I went in and started telling you data and so forth. And then here's all of my payout structure. By the way, here are the rest of funds that, oops, that's not what I'm looking for. Anyhow, it's back on the other sheet. I was going to say, Roundhill is filed for a lot more single stocks. They have a MSTR, if you will. They have a MISTI. It'll be the weekly single payer, 120% leverage with swaps and call spreads. But we'll just have to see. They're going to remember they file with the SEC. Many times they get approved and they set on them like, okay, well, we're going to launch one a week. So, and then they wait for the market. So there's a lot of factors involved. They don't just file for 20 and, one day when they're approved, go out and launch 20 funds because they've got to seed the capital. They go borrow the money to seed the capital to buy whatever they need to buy the swaps. And then when people buy into the fund, they pay back that money, right? So that's the nature of the beast in the brokerage business like that. More fun business than brokerage, FUND. All right. So I find this super, super fascinating. Okay. And I want to just show you a little bit on this. If you just wanted to get Roundhill and don't care, okay, move on. Right. I will understand. So let's say I want to look here and I want to know how many months do I get a return of my investment? Oh, that didn't. Whoops. Oh, it did it just the opposite. Hmm. There we go. So this is the period of time. Only 3 funds on this list, and that includes all the Yield-Max funds. Only 3 have returned all their capital from when they launched. Well, they launched a while ago. Okay. So Misty has had 14 distributions, 14 monthlies. Coney's had 21. NVIDIA's had 25. They reached months till 100% house money. Everybody understand what house money is? I go in, I'm playing blackjack. I give the dealer, I put $500 down. I play for 3 hours and I count my money and I got 1,000. So I go cash out $500 chips, put it in my pocket. Okay. Now I'm playing with house money, right? I don't have an investment. So if I get down to 100 or $200 and I say I better get out of here, so at least I'm a winner, then I know when I'm a winner, right? And so the same concept here. We care about NAV erosion. We care about a lot of things, but I also care about getting my money back. So Misty launched at $21.19 and it went out to date in 14 distributions. It's paid $36.92. So on the ninth distribution, it only took 8.43 months of the money to be 100% of 21.19. I know some of you guys are going to say, Bruce, my average price is 34 or something. Hey, I get it. You didn't buy at launch. Now you can buy again at this kind of a price, right? We're very close to this price and have been under. But are you bullish? Never buy these things that you're not bullish. So I find this very useful, very indicative of a winning fund. Its monthly average toward getting to house money is 12.45. So what does this tell you? This tells you who are the big payers percentage wise. All right. So here's the current price. Here's the gain or loss in NAV. Okay. This is what it started at, some 15 months ago. So I can sort many different ways, right? So who's the biggest NAV gainer? But they still haven't paid. So they've been 19 months. They've only returned 44.57%. Oh, sorry, this is curve, guys. Whoops. It should be. I didn't make it red, but it absolutely is a curve fund. If it was Nestle, it's returned 84% of its money in 21 months. Okay. So it's only months to house money. If you bought it, 3.87 payments, call it four. So when it gets to 24 months, it will have returned all your money. So a lot of different ways to look at this kind of stuff. This one is Netflix. And what's fascinating here is the Curve Fund. Curve does not pay the same kind of distributions that UMAX does. They're typically very lower, but they maintain their NAV. If that's not an example to show you maintaining the NAV, one of the few UMAX funds that have been around that's still above its NAV price, right? It launched at 1757, is trading at 1806, and it's paid out 84% of its launch price. It's paid out 1562. Average distribution over the 21 months, 74 cents. And toward house money, it's paying 4%. So if I sort all this stuff on that, Misty's the big payer, Pulte's the second highest. Coney is still up there, but frankly, it's not paying as well. It's still yielding a lot, but this is carryover from when it got there in the amount of months, which was what, 12.77, right? So the best was Misty. Pulte looks like it's going to get there in 11 months. Okay, so it would be second place. Right now, Coney's second place. It took it 12.77 months. NVIDIA, many call the GOAT at times, when it was paying and roaring, it took it 14.93. It's now at the 25-month mark and pays a good clip along the way. But, and so then you look over here at your NAV losses or gains. So when you can combine a NAV win, okay, like Pulte's still up 20% from its launch price. Granted, it's only had 8 distributions. It's been around close to 9 months, but it's paid 35.08 on 51.43. So I went over and did the math and said I need to get to 51.43. That's $16.35 in 3 more payments. With 8 payments, I need to average 5.45. which they would do that over the last four payments. The first four payments, they wouldn't. So again, is it going to be four payments before they get there? It could be. That's still a year. Nobody's done that except for Misty, and Misty's the GOAT. No question on that. So I think this kind of data allows me to see the less yielders, more conservative, the NAV sticks there. So it gives you guys a lot of different ways to spin the data and filter and take a look and see what you like and you don't like. Look at here now. Out of the Granite funds, what does Granite do? Granite uses 200% leverage on their monthly paying stocks, their yield boost. Now, a couple of them just launched, so they haven't paid yet. They're 15, 18 days into trading. This guy's had five payments. So their TSYY, although the NAV is down 51.61, okay, they're showing that they could in 15 months, right? They're 5 months in, and call it 11 and 16 months, they could be giving your money back. Hey, get me amount a battery. Sorry guys, my that's what happens when you have an optical mouse and it stops. Okay, so moving right along. So that's what I got for you. And then I tried to add a little bit, and I came in here and said total distribution. So if you have some that you want to look at, I'm happy. Here's your NVIDIA and your BTC. There's NFLP with a fabulous at curve gain. And we're talking over 19 months, guys. It's not paying what Yeomax is paying, but it's growing the fund. And Yeomax has a positive, but it's a 2% positive, and it's outpaying it, but it still wins. Now, on their Tesla fund, similarly. So I compare these, by the way, many times, but I think this kind of tool right here gives you a whole lot of ways to look at. And listen, guys also hit me up with two funds. And I want to tell you guys something. They said, hey, can you include Carvani? Absolutely, I can include it. And somebody else said, Robinhood. Now, when I go look at those stocks through my lens of, 40 years in investing and doing a lot of things, I've seen so many charts, I've seen so much FOMO action. I say to myself, Carvana, what do they do? Well, they're retail used cars, and they do it with a different switch to the internet. They have more offices than CarMax, and they'll come out typically and look at your car. It's valuable service things, but I don't see any unique IP, intellectual property. I don't see something like I see in Palantir with AIP and platform as a service, and nobody else can do what they can do, and the Army's going to spend, um, $1 billion contract, and a hospital, and a railroad, and a manufacturer. So there's just certain things that catch my attention. Robinhood, great, launch a lot of the young generation on mobile phones trading and decent margin rates and all that. But is that something that somebody else can just come along? I remember E-Trade. I was always, I almost said Yomax. I was always an Ameritrade guy. But going back before that, I think I was in E-Trade, and I can't even remember because when I started, they were, the still the big firms around. And then all of a sudden, we got these quote online brokers in the 90s, right when the internet came, 96, 97, 98, 99. And then for the most part, I hung in there with Ameritrade for many years until they moved to Schwab. But I also have Fidelity. I also have iBroker. Um, so my point is, they're good, But when I see an on fire stock just run away from its 50 and 200-day moving average and it becomes stretched and it's just, it's double and triple, I say to myself, that's an accident waiting to happen. And so I feel sometimes I need to say, instead of defending and not putting it on here, everything deserves to be on here, right? I just say, guys, don't just FOMO in, don't chase yield, right? They're paying 6.98 toward house money. They've been paying for 4 months, right? So I'm projecting in another 10 months, 10.3, so call it 15 months. But you know what? The odds are against them getting there. I'm not talking even about whether the market goes down. I'm talking about things do not. I mean, Tesla's a perfect example, and that's some fabulous technology, if you ask me. I think Tesla, long term, multi years, between FSD, robo taxi, what is the Gen 3 robot called? I mean, they got so much tech in there because they got a brilliant, brilliant engineer. Don't get into politics, guys. I don't want to hear comments about that. You can't deny that the guy's not a genius. And if somebody wants to work that hard and be a genius, they'll continue to be successful in whatever they're doing because with all this supercomputing and AI, people that know what they're doing and work super hard can make it. All right, guys. So that's enough on covering all that. A lot ask about SMCY. Hey, look, I don't hate on Ulti. I just find Ulti pays a lot in its yield. But Ulti, it's never going to be the top fund. It's always going to be the middle tier. One of the guys wrote in the comments, Bruce, can you just look at it since it's gone to weekly because it's doing a lot better? Listen, guys, I heard Jay on endless interviews. They were using one methodology when they first started. Then a month or two later, because they had such we're doing it different now. We're actually buying some of the underlying and we're writing covered calls and we're not doing the synthetic. And then, we got another strategy. Okay, now we got call spreads. That's going to solve all that. Well, now they got swaps. But I don't know if they'll do swaps on all that. At the end of the day, it is what it is, right? You got 15 months in Ulti. And I'm not saying it's a bad fund. And I get it. If you want to buy a lot of it at $6 and figure out, how long to house money and say, it's not going to go broke, it's probably okay. But I don't consider it in this tier. I don't consider it in a Misty or a Coney or an Nvidia, okay, or a Palantir. It just simply isn't. And it's okay. But I wouldn't run out and put, a fifth of my wealth in it or a tenth of my wealth. And I might do that and have done that in Misty and Coney before, probably put 20%. But even then, the volatility and stuff, you literally, when you study these things, you almost have to trade them or you have to flip around. I mean, it's the same thing with the hedge. The reason people want the hedge and get nervous is, and guys, by the way, I'm going to tell you this because I know some guys are going to say, oh, well, you can just buy if you want to hedge Tesla, just buy Crash. If you want to hedge Nvidia, just buy, what is it, chips. I can't even remember dipping chips, right? The I forget the symbol now. And fiat for coin, it's not that simple. You can end up losing in both, believe it or not. I'm not saying that there isn't some hedge in there, but it's more about income. It's not a true hedge. You want a true hedge? Go out and buy a 2x bear when you're long the fund and you have a lot in there. Now you're leveraged, or just buy puts. Okay. But people like to buy something they can watch other than their puts. And not everybody is option savvy. Okay, guys, I'm going to let you go. This is the Roundhill Weekly Single Payers. It's also, let me show you that list if you haven't seen it. Okay, that is in right here. So they file for an Airbnb, they file for an ARM, they file for an ASML, they file for a Broadcom. They've filed for BABA. By the way, I like BABA a lot. Okay. And Bobo from Coney, from Yeomax. And I'll like this because I'll tell you why. There's one other function that you have to look at. Remember I was telling you about Carvana and Hood and their retail-oriented things. It's like the new restaurant that everybody goes to in town when it opens up because it's fabulous. And then everybody else says, oh man, we can do that too. And three new restaurants open, and 2 years later, that restaurant's doing a third of the business they used to do. And it just happens in retail. I mean, if you're Amazon and you've built that thing, it's hard to come in and just knock Amazon out. But if you've got some little small online retail shop on Shopee or something, then they're a dime a dozen in categories. You've got to be a massive leader with IP and things that other people simply can't do. So here's iBrokers, right? Costco, CrowdStrike, the something King, right? For I forget what it's called. Hood, right? Oh, the defense contractor. MSTR, guys, another Misty. Netflix, Reddit, Shopify, Spot, TSMC, Uber, ExxonMobil. So they've applied and I think already approved on a lot of these. It's just what they choose to lose. But don't mark my words that they've been approved. They take about 30 or 45 days typically and can go up to 60 to 90. But I suspect we're going to be seeing more soon. DraftKings. That's that's what that is. All right, guys. This is Bruce with Targeted Wealth Creation. I am not a financial advisor. This is not financial advice. Have a great day ahead. And if you're in Group C, Coney, and a few others, and all the weeklies, you'll be getting paid today. All right, guys. Bye for now.